operation after coming through the principles of bank. Now, in banking operation, the legal transaction executed by bank in its daily business, such as providing loans, mortgages, investment, depending on the focus and the size of the bank. It involves the practice and procedures that a bank uses to ensure that customers' transactions are completely accurate and appropriate. Banks perform various types of transaction and activities to support their banking business. The key operation activities are listed below. So these are the operations which are carried out by banking. Number one is acceptance of deposit. This is the key objective of banking or financial institution. Deposits are the basis of the loan operation, since banks are both borrowers and lenders of money. So they borrow money from the public by paying some interest, and they lend or they give loan to the public by receiving some loan, some interest. Lending of funds. This advance can be made in the form of overdraft, cash credits, discount trade bills, term loans, consumer credits, and any other miscellaneous advances. So when they grant advances to the public, they generate some revenues, and these revenues gives them profits. Clearing of checks. Checks are used to facilitate trade and business by endorsement and withdrawal of deposits. Banks render a very important service to their customers by collecting their checks drawn on the bank on other banks. So it's another very important function or operation which is played by a bank. Number four, remittance of funds. Bank also facilitate fund transfer from one place to another, leveraging the vast network of branches that are interconnected to each other. So they help customers to actually transfer their funds from one company or from one branch to another, locker and safe deposits. That's number five function. Bank safe deposits locker are good option for safeguarding valuable and important documents. Here, the banking institution gives a key. So there are two keys. One remains with the banking institution. Two is taken by the customer. So the precious items like gold, silver, etc. or your logbook can be actually kept in the bank with some charges. Bill payable service. Bank also provides service related to bills payable, payment of insurance premium, collection of dividends. So they act on behalf of their clients. Online banking. The growth of internet and e-commerce has transformed banking industry, and customers are fast moving from branch banking to virtual banking. Credit and debit cards. Credit cards are issued by bank, are another form of lending, and they are not only good business for the bank, they help the economy. So when the customers have no money, they can actually get a credit service which they can make use of the goods before they make full payment. Overseas banking service. Banks offer financial service such as payment, account, and lending opportunities to foreign clients. That is another operation which is played by the bank. Wealth management. Service offered by bank include full range of financial service and product clumped with advisory service from expert professional. So they can provide expert professional by advising their clients on the management of their wealth. Investment banking. Wide range of services are provided under the umbrella and may include assessment of investment needs, evaluation of asset structure, and the liability management requirement, managing portfolio, of financial assets, trading in securities, fixed income. So apart from fixed income, commodity and currencies, corporate advisory service for mergers and acquisition, corporate finance, and debt and equity underwriting. So these are functions which are played under the investment banking. And finally, social objectives. In the recent past, there has been a concern effort by the policymakers in reorienting banking towards achieving social objectives. Like we have CSR. So the CSR is corporate social responsibility. This is now a critical component in the banking institution. Like for example, in Kenya we have Equity Bank, which provides Wings to Fly scholarship to students. Each and every banking institutions are now providing scholarship. These scholarships are tailored to as social objective, corporate social responsibility. Role. What are the roles of banking institutions? The banks play the following roles in an economy. 1. They act as intermediaries, intermediation. So they come in between the customer and their clients. So they come in between to help the customers. 2. Payment. They make payment on behalf of their customers. 3. Guarantor. They can act as guarantors. So in terms of any business deal, they can guarantee some payment. Risk management. They provide risk management. So they can help the investors by providing insurance services. Investment. They can provide investment services by allowing the customers to get or invest their money in different opportunities. Safekeeping, like now the locker and saving. This is another critical component which is played by financial institutions or banks. Agency. Agency means they actually create an element of agency. They policy. They provide policy mechanism. They come up with policy or they advise the government on the best policies which can be useful in running an economy. Rights. What are the rights of banking institution or banks? The banks have the following rights. 1. Rights of general lien. Lien means the right of the creditor to retain the goods or securities owned by the debtor until the debts due from him is repaid. That is number 1. Number 2, the rights of the set-off. Bankers possess the right of set-off, which enable him to combine two accounts in the name of the same customer. Number 3, bankers' right of appropriation. If the customer has more than one account or he has taken more than one loan from the banker has the right to appropriate this loan by the accounts. Then finally, right to charge interest, incident charges. As creditor, a banker has the implied right to charge interest on the loans granted to the customer. In the same way, incidental charges like service charge, processing fee, appraisal charges, penalty charges may be imposed by the bank to the customer. So when actually the banking institution is providing particular service to the customers, they charge particular amount. So these are the rights of the banking institution. Right of general lien, right of the set-off, banker's right of appropriation, right to charge interest, incidental charges. Rights to sue. They can sue their customers if they breach particular contracts. So banking institutions have rights, and if these rights are violated, they have the right to sue. Thank you so much. To see you in the next